Okay, this is Budgetary Evolution. I welcome you all, those who are new, and our family right over here. I welcome you all. So today, guys, I wasn't actually ready. I didn't mean to actually to make a video about this, but I did somehow procrastinate about it because I actually have actually published this video a long time ago. uh, I didn't make the content, but I was quite busy, and as I was still waiting for the equipment, we've been making some of the videos, and we don't actually like the quality of the quality of our audio. That's what I mean. So what's gonna be happening from now on is that as we are waiting for some of the equipment, we got some of them, but few things we're still waiting for them. So without any waste of time, let me tell you what today basically we'll be talking about. I mean, the video of today, what is it about? So the video of today is aimed or targeted or is for people who are actually interested in forex trading, right? People who have came this concept of forex trading, who wanna start day trading, who wanna start trading forex trading. Basically, I could say the whole market, because the the concept that we actually use in forex trading could work in most of the markets, markets such as like features, commodities, what else, in indices, stock market, crypto market. You get me, right? So without any waste of time, let's just go to the introduction, as will be choosing forex, guys, as we'll be introducing forex. Sorry for that. As most people have seen on the social media, that you'll be seeing people with chart, they will be posting charts, they will be posting a lot of content like money. Most of the time they post money, which are influencers. As I call them influencers, because most of the people in the social media, right, they post what is it, they post most of their earnings, right? They do not actually post the skill or the content that actually makes them that money, right? So they are forex influencers. I don't want to talk much about them right now. So what is forex? Let's start by what is forex, right? Forex is a common term used to describe foreign exchange. It is also called currency trading or FX trading. So you get to come across people calling themselves with a bunch of names, including FX on the side, or starting with FX, you know what I mean? So as we continue about what is forex in general, what is forex? It it is essentially the trading of the world's various currencies. Trading currencies is a little bit different to trading shares or stocks, as currencies are traded against each other. What I mean by this is that you are comparing other country's currency to other country's currency. It is not as confusing as it sounds, right? So yeah, I will get into the practical part of it. So this part is just the theory part. Basically, before the end of this week, we'll actually upload another video, which is the practical part of it, right? We just deal with this one, which is the theory part. So yeah, I talk too much, guys, and I'm sorry for that. I talk too much. So what do we trade in forex market? I've came across this video on, I think it was on TikTok. I don't know, there's been this trend out in TikTok. What do you trade in forex? Something like that. Let me just focus on the content. Stop with all those things that we come across. So what is it that you actually trade in forex, right? There are several currency pairs that can be traded, but the majority of traders just stick with the group of about 6 to 8 pairs, right? What are those pairs? No one will get to them. We have what they call the major pairs, that are by far the most heavily traded currency pairs, and a lot of traders are just happy trading one or two of them, right? So going on, we have the major pairs, which is Euro USD, USD JPY, GBP USD, USD CHF. What is Euro USD? Is Euro dollar against the United States dollar, right? You have USD JPY, which is Japanese yen against the United States dollar. GBP USD same as Britain pound against US. Get I mean, and USD CHF, which is US dollar against the Swiss francs, right? As we can see, most of those pairs are against US dollar. So we have the second type pairs, which are AUD USD, USD CAD, NZD USD. So I won't like, as you can see, you can read for your own. We have Australian dollar against US dollar. So I won't waste any time on that. Let me just continue. Where do we trade Forex, right? Where do we trade Forex? You will have to open an online brokerage account to enable you access to brokers trading platform. Most brokers offer demo trading. Sorry with my reading, my vocabulary ain't that good, you get what I mean? But the skill is here, guys. Bear with me. So, what is it? What I'm trying to explain this as simple as I can. Explain it in a way that anybody will understand. So, as you can see, where do we trade Forex, right? As you can read there, you will have to open an online brokerage account. Online brokerage account, like, guys, is simple. It's similar to a banking account, just the very same thing. For you to have the Visa card, the MasterCard, all those cards, a banking account, you have to like sign up with a particular bank, right? For you to for them to grant you like a card, so to pay everywhere, something like that. I don't know if you get me, but if there's anything that you didn't get through this video, please leave a comment so I will get to that. I will personally answer you. Where you can participate trading without risking real money, that's a demo account. In a demo account, you don't have to deposit any money, but you can actually trade, practice your skills. It's a little like playing Monopoly. You don't need to deposit any funds with a broker to gain access to their demo platforms, as most are quite willing to let you try without any obligation. This also gives you a chance to try various platforms and see what you feel comfortable with. You get what I mean? So I said I don't want to waste time, so I'll be moving. So how do you actually trade Forex, right? Forex is a leveraged financial instrument as its option features CFDs, warrants, etc. So this is nothing new. You trade Forex in lots. This is basically the industry standard, but there are brokers out there that do things slightly different. So as we have come, futures, CFDs are just particular things that you'll be trading, right? Which you will choose as a trader. That I will be trading US dollar against ZAR. I'll be trading GBP USD. I'll be trading Nasdaq. I'll be trading those things. And as we have come, you trade Forex in lots, right over here. You trade Forex in lots. So what is a lot? Lot is a particular size which you are aiming to trade at. Let's say for those people who have been playing those gambling platforms where we actually bet soccer, we actually bet lotto, stuff like that, there is a particular amount that you are willing to risk. Here a lot is a particular size. That size is computable to the very same how much you are willing to win or how much you are willing to lose, at which standard or at which size, I could say. This thing of me trying to explain this a little bit easier is complicating a lot of things, so I'm just gonna go straight. If there's something you don't understand again, drop a comment, I'll get to you. Maybe we might as well get on one-on-one session. I don't know, it will actually like depend on the comment. So lots are known by different names depending on how much currency they represent. There is a standard lot, a mini lot, and a micro lot, right? These lots are basically how much. So let's leave that. One standard lot is 100,000 units of base currency, and is normally expressed as 1.0, right? And one mini lot is 10,000 of the base currency and is normally expressed S0.1, 1 microlot is 1000 units of the base currency, and it's normally expressed as 0.01, which is a lot of mentors will tell you, or a lot of gurus, to use this lot size as a beginner, right? I'm not saying anything there. How many lot size can you buy or sell depends on few things, right? Your account balance, as I was saying, is how much money you are willing to bet. You get what I mean? You cannot be willing to bet 100,000 whereas you're only having 1,000 in your bank, right? You cannot, like, specifically when you're using a bank account, you cannot buy anything that is above your current bank balance. So same as here, you cannot bet in a higher lot size where else your balance is low. Your nominated trading leverage, right? The leverage, you can set it. So basically, I won't go too much on it. You can set it from 1:1 to 1:2, depending on different brokers. The one that I'm using Nextness, so it has an unlimited. Is 1:2 unlimited, so it's like infinity. So okay, how much you are willing to risk on the trade, right? Yeah, we've talked about that. This is where we mention words like margin, leverage, risk. All these words are important, but there is no need to get stressed about them, as they can all be controlled, and I'll show you an easy way to stay out of the trouble, right? So don't worry, like, you just need to understand this theory, né? You just need to understand this theory. Like, as I've said, the practical is coming. The practical is going to make a lot of sense more than this theory. I know some. Let's just continue. Fundamental analysis or technical analysis. So there are two main ways. I'm just going to be sticking with currency trading for now. Forex trading, which is basically currency. I'm just going to exclude the others. So in currency trading, here is an overall of fundamental analysis. So don't compare too much on it. So but on specifically currency trading, we often come with fundamental is basically just news, right? Trading using news. So in news, we actually we have political views, we have economic indicators, like we have those things that impact the country. That's how fundamental analysis is based on. It's based on things that impact the country's economy. Whatever that impacts the country's economy, how important it is, that's how we actually trade using fundamental analysis. So technical analysis is basically, as you can see, we having structures over here. We having these things over here are called candlesticks. So using technical analysis is actually based on trading using the historical price movement. That's all our technical analysis is all about. For some years or for some time, about even a minute from now, there's been a structured candles have formed, whatever they have formed. So when trading using technical analysis, you're just using the previous history, the historical data. You're taking it, comparing it to what's happening right now. There is a pattern that have occurred in about an hour ago, days ago, whatever that pattern, you record it, and then you're going to trade it in the next coming days. You see, as you can, let's say for instance, you see a pattern that is drawn like a monkey, and you just save the pattern, right? You see it, we had a monkey. When we had a monkey, this shot to the upside, we went long. Or when we had a monkey, we went short. For long is buy. Okay, when we had a monkey, we bought, so it was buy. So when we had this kind of monkey, we went sell. You get what I mean? So in the future, once you have analyzed that data, you have done your research. In the future, what you do, once you see that monkey, you are cocksure that this monkey means that we are buying. That's actually the technical side of it. So news and fundamental analysis. Fundamental analysis is a method of evaluating the intrinsic value of an asset and analyzing the factor that could influence its price in the future. This is form of analysis is based on external events and influences. I'm not so good in English, as well as financial statement and industry trends. Forex fundamental analysis focused on the overall state of the economy and research various factors including interest rates, employment rate, GDP, international trade, manufacturing, as well as the relative impact on the value of the nation currency they relate to. So this is what I was explaining, guys. So I'm a little bit too forward. Once I come across a topic I want to talk about it, this is how I'm excited about this. This is how deep I am into these things. You get what I'm saying? This is how deep I am into trading. So I just like to talk about it. So technical side, you will see technical analysis is a form of security analysis that uses price data, as I was telling, the historical price data, not just price data, historical a price movement that have happened in the past, and volume data, typical displays graphical in charts. As I was talking, those things that you see in the chart, we had line chart there, we had candlestick chart, we had bar chart, all the type of chart that we use when we trade. So that chart are analyzed using various indicators in order to make investment recommendations. So yes, guys, we don't actually trade, okay, this price section where we basically just draw lines, put this our key level and stuff like that, which is called price action. So, and we also trade using different indicators. So we have different type of indicators. So I won't go like technical, there's a lot to do. That's it, like there's a lot to talk about technical analysis. I might as well just do just a video on technical analysis, because there's too much in technical analysis. There's even softwares, there's even trading robots, stuff like that. So from here, technical analysis is a range of techniques used to try and forecast future price movement, right, for of financial product based on the historical price movement and patterns. As I was talking about a monkey, it was same thing as patterns, right? There are certain patterns that have occurred in history, I mean in the past, which why they say historical price movement. That's why we say historical price movement, right? So those patterns, we use them to trade in the future. Foreign exchange markets are particularly well suited to use technical analysis. So foreign exchange markets are particularly well suited to trade. So then this other thing, which is risk management. So we have talked about the introduction of Forex, we have talked about the fundamental analysis, we have talked about the technical analysis. Now we're at risk management. So what is risk management? You know, again, I will go back to social media. When you get to social media, you'll be seeing these highly influencers. You know why I say these people are influencers? As they will be showing you this chart, or you know, they'll be showing this site where they've made this much. At the very same time, you will hear them at the end of the video saying that here's a link to the broker that I'm using. I don't know if you're familiar with affiliate marketing. I don't quite remember what they call it in Forex, but there's this thing in Forex that whereby you can sign up if you're a broker. I don't remember. It's like FTO or FPO. I don't remember. But once you sign up with a broker, like those highly rated traders, you'll see them quite everywhere. You'll see them. They'll be hosting with whatever the broker they are showing up with. Know that when you sign up with their link, there is a commission they get. When you deposit, there is a commission they get. You know what I mean? So, but it differs from different brokers. So yeah, Forex risk management comprises individual action that allows traders to to protect against downsides of a trade. What is the downside of a trade? Downside is more like a loss. More risk means chances of a sizable returns, but also a great chances of significant loss. So if you increase your lot size, remember we talked about the lot, which is basically how much you're willing to bet, how much you're willing to lose, or how much you're willing to win. You can higher your position, or you can lower your position. If you higher, your position, it means you might win big or you might lose drastically. So yeah, but we'll talk about that. But by the way, I don't have a course, uh but I don't actually, my course is not actually open every time, you know what I mean. So you need to understand, if my course is basically open every day, like other traders, like other mentors, I'm not what can I say, I'm not talking bad about them, right? I'm not talking bad, but I want all of us to understand something. How can you teach let's say for instance 1000, if you can go to them, like those highly rated mentors, you'll see they are followed by more than 1000, right? So let's just talk about 1000. So let's say you have 1000 students, and let's start by 500. You had 500 students, so basically from the next day, let's say it's Friday, so Saturday, Sunday, you get a bunch of 5 new students come like daily. So how are you able to teach those? How are you able to manage those like students? How? Instead, you know what they do? They will give you a pre-recorded course, just like that, just like you have gone to YouTube, just like right now, get on me. This is what you actually pay for. It's just an information drafted in a right way. That's what you actually pay for. You actually pay for you not to do the research on your own. So let's go back. Risk reward ratio. In risk management, we do have what we call risk reward ratio. What is risk reward ratio? Risk reward ratio is a mathematical calculation used by investors to measure the expected gains or a given investment against the risk of loss. Risk reward ratio is typically expressed as a figure of assessed risk separated by a column from the figure of for the prospective reward. So I came across a bunch of big ways. So to make it like a little bit simple, okay, let me just read this for you. A risk reward ratio measures the difference between a trade entry point, stop loss, and take profit order. Using this ratios allows a trader to assess the potential for profit and all loss of a trade. 2 units of expected gains to 1 unit potential loss will be represented as 1:2 ratio. Even myself, as I have just read that, I can understand it might get convincing. It like not convincing as such, but it might get a little bit complicated. So to actually explain it verbally is that, you see, as here a risk ratio of risk is risk to reward. You are actually risking 1 to get 2. What is it? Let's say you are having how much? 100. Yes. Let's say you are having 100 rand, right? And you are risking 50 rand, right? To get 100. This is basically a risk to reward ratio of 1:2, right? You're actually risking 50 rand to get 100 rand. 1 aims for your loss, and 2 aims for your potential return. You're risking 1 to get 2, so it's 1:2. There is 1:1. You are aiming to lose 100 rand to make 100 rand. So right, if your risk to reward ratio is 1:2, you're basically aiming to lose 100 rand to make 200. So that's risk to reward. What does it mean? So trading forex, we have things like type of orders. You have to buy, you have to sell, but there are other orders. So market order instance. So market order, I will say, is an execution, market execution, right? A market order is an order to buy or sell a security immediately. So market execution, that's when you buy now, that's when you sell now, that's a market order. So we do have a buy stop and a sell stop. So a buy stop or a sell stop, let's say you are having a train, right? A train goes one way, right? When a train goes north, you can basically see, you say, okay, this train will go this high. Let's say it's 1 up to 100, and you are at 50. So there is a possibility that the train might get to 100. So you are saying at 70, as the train keeps on moving, you're saying at 70 I want to actually buy, or I want to actually get on a train because I want to reach to 100. My aim is to 100, but I'm going to get in at 70, because when it gets to 70 I'm quite sure it might get to 100, but currently now is at 50. I don't know what might happen at 60 or 65, stuff like that, but at 70 there is a possibility that it might get to 100. Same as a sell stop, right? Let's go to the negative side of negatives number line, right? So at 70, let's say you are at 0, but you do get the point, right? If not, you'll wait for the practicals. I'm sorry. So let's go to buy limit, sell limit. A buy limit is basically saying that let's say the price have actually moved, is you saying that the price will return here again and it might actually move. Buy limit is a little bit complicated for me to explain, guys. It's a little bit too complicated for me to explain like this on just theory. It wants me to talk about particles, but as I've said, I don't actually want to make this video very long. So one of the things that most traders don't talk about is this trading psychology, guys. Forex trading has a trading psychology. If you are not good in psychology, like your mind need to be fixed. You need to understand this is not a get rich quick scheme, something like that. So trading psychology is the emotional component of an investor decision making process, which may help explain why some decisions appear more rational than others, you know. So obviously, as there is a demo, when you're trading using demo account, like you are more relaxed, you just buy, sell, stuff like that. You get what I mean? So, but when there's money involved, once you deposit your money, and even if you have deposited as little as 100 rand, guys, once you see the rates, once you see negative, now it starts to hurt you. It hurts you. So emotionally, you get attached. Once you get attached to the graphs, you get attached to the money, you end up doing negative. I don't really know if I call like I should call them negative mindset, but you end up doing decisions that you shouldn't have done. So improving your trading psychology, identifying personality traits. A trader should identify personality traits early enough and plan how to overcome the negative traits when actively trading, so they do not make decisions without a solid technical analysis. This actually means that you need to know yourself. You need to know how to manage yourself. You need to remember that there is a strategy, and you need to understand that you need to follow the strategy. Because if you don't follow the strategy, you end up being emotionally attached. You're going to make decisions based on emotion, not based on the strategy that you are using, not based on the information that you have gathered around that made you at first to actually execute a trade. You get what I mean? And secondly, you need to create a trading plan. What is a trading plan? A trading plan is basically more like a schedule. You know how these people who works in the office have a schedule, right? You know, 5 a.m. is a meeting, and a meeting with this and this, and the meeting should not take this much, and you know, all those things. Like a trading plan, a trading plan, most people know it as how much you're aiming to make, what you're going to do, stuff like that. But a trading plan actually involves you into discipline. You first need to actually wake up, make up your bed, have a little bit of goals in a day. A trading plan, you have to know that how actually you need to compare your data. You need to know that I have to actually wake up, trade, or I should wait for tomorrow, or whatever. Like a trading plan, guys, is not just about the money that you are willing to make. You know, it's not only about the daily target. The trading plan is more complex, but as I've said, this is just the theory part. Will come up with the technical part of it. I mean, the practical part of it. Conduct the research. This is where I actually mentioned something about data. You need to know about your data. What is your data? You know what I mean? Your data need to be easy, but before, as I was saying, before you actually get your strategy right, you need to actually there's fluctuations involved. What I mean, like when you're starting with a demo trading, you should actually start with your trading plan, conducting a research, when actually seeing when you are profiting, why are you losing. You need to actually identify those things. Once you identify those things, when you get to a real account, it's a little bit more easy for you to know that when I trade at morning I lose, when I trade at night I win, stuff like that. When I trade hungry I win. You get what I mean? It's all about the things that makes you wanna win, things that makes you wanna lose. You get it? Not like wanna lose, the stuff that makes you lose, and getting rid of those things, like moving away from those things, and actually staying in the field that actually improves your I mean your what is it, your potential returns on your investment, right? So guys, I think we have came to the end of our video for today. We've came to the end of this episode, so basically wait for another episode. So if there's anything guys you didn't understand, please leave that in the comment. I will attend that for sure. I will attend that for sure. And please do like this, like the video, subscribe, share if you want to, I don't know, but just subscribe and like the video so that I can keep on uploading content like this. You know what I mean? The only way I'm gonna keep on uploading content like this, that's when you engage with me. If you're not engaging with me guys, it basically means that you are okay. You know, you can never one of the things that I want to say, okay, we've come to the end of the video. One of the things that you need to understand is that it takes time to do these videos, but I'm not dead. As you can see, we've came out, it was only 20 pages. Trading psychology, we talked about trading psychology, risk management, analysis, which are basically fundamental analysis and technical analysis. Then is the introduction part. It took a little bit of more pages than I could say. So I don't want to talk much guys, but if there's anything that you want me to talk about, if there's anything that you want us to engage on, we'll actually engage on. So thank you for tuning in today. We'll basically tune on the next coming days. Hey, let's do this thing now. I want to stop.